Now we get to turn abroad and look at what's happening in the global market. And we always start with, well, how is the U.S. going into the market? What are we exporting? And when we look at across the board, we had a fairly sizable increase, which is good. But at the same time, we still had big builds in products, even though we had an increase in exports. And it's all, imports still overwhelmed. But this is where we're going to start to see some of this pressure because imports aren't stopping, but exports will have pressure as we go through the remainder of April, which again is going to limit that. It's going to increase the amount of product we have in storage as this crude is being turned from oil into, again, the refined product side. So when we look at gasoline exports increased 251,000 barrels a day. That's up 22,000 year over year, 129,000 against the 5-year. That was a nice spike. We saw an increase, but not to this level, which again is that benefit. A lot of it still going into Latin America. The question is going to be, where is Europe going? We've had some cargoes that were flagging Europe, now flagging Latin America. We're starting to see some of this pivot, which again is just going to keep some of these headwinds against the U.S.'s ability to get into the open market. Distillate had an increase of 389,000 barrels, still down 201,000 year over year, 90,000 below the 5-year average. That's we had a spike. Now we think that we're going to pair off, start to come down. And then the opposite happened with propane, where propane was down 417,000 barrels a day. That's the one that we think is going to have a spike up. So again, it's all about that timing as to when is it recognized, what is moving in, what is moving out. We did have issues in the channels last week in terms of fog, in terms of slowdowns. Some of the channels either had speed restrictions or were completely shut down to different traffic directions, which also left, and allowed some things to export but not import it to the same level. So again, these are things that will again level off in a 4-week average movement. So then when we look at crude exports, we had another increase of 260,000 barrels a day to 3.434, which is a positive to see. But even though we had this big increase in exports, we still had a fairly small draw in activity. And this is where we continue to get concerned because that number will come down. And as that comes down, what kind of pressure are we going to see in general? And just to get an idea of, well, why do we think there's going to be pressure? So just an example of what happened. So Chinese exports, this is talking about in March, Chinese exports increased 25% month over month. 45% year over year. India's exports increased 56% month over month, down 1% year over year. And South Korea's exports increased 39% month over month and 3% year over year when we're talking about refined product exports. And that's where we continue to see that pressure that we keep talking about in the Asian world as more continues or is flagging to come into the Americas because they're trying to manage their storage. So Singapore will see some of these increases. And we're just going to get some of this product that's going to compete to find a home, which again is going to cap the amount of activity. And we do have an increase in refinery downtime. And as that downtime comes through in both India and China, it's going to hit U.S. exports, as we keep talking about, like some of those things that are going to be the residual. Now, when we look at gasoline, you can see that we're right back to that 9-year high, which is something that will pair back closer to the 9-year average as we continue to see. But this gasoline will remain the brighter spot. The question is going to be if the U.S. market remains better than abroad, some of this will turn inwards. We'll see some of this go through, but we also have a backdrop of summer blend versus winter blend. Is it cheaper or more cost effective on a margin level to export some of the winter versus trying to enrich it to get to the summer side? So again, this is where we start to get some of those balancing acts to try to manage what is currently in storage. And then when we look on the distillate side, we're still below the 9-year average. We had that spike off the bottom. It's one where we think we're still going to stay. As we were saying, we weren't going to stay below that 9-year cloud on the bottom end of the cloud, but at the lower, between the 9-year average and the bottom of the cloud is where we think we're going to live, especially on the distillate side. Crude exports broke out to those highs. Again, that's something that we think on average is going to be obviously above the 5-year average, but below the 5-year top of the cloud, and just work within that as we go through the next few weeks. Propane had a big drop off. That's one that we think we'll get a big spike, and it'll just remain, again, above the 5-year average, but below that top of the cloud in general. So then when we look at ARA, tank stocks, it had a small decline, essentially flatlined here. This is where, when we look at what's in storage, the pressure, when we talk about what's happening in Europe, this is something that we think is going to continue to just go sideways at this point, sideways to a slightly up as we continue to see this battle back and forth, but. They're not buying as much crude. They're leaving more on the water. They're trying to push more into the open market, which, again, they're trying to manage to not go back above those highs and set those new records. The issue is going to remain in the India high-frequency data. So you can see on new COVID cases, they're at 514,000. On average, total active cases are now at 692,000. They're trying to accelerate the vaccination program. Again, India is a very big country, so that's something that they're going to continue to work through. The lockdown index, it's very local still. It's on a state-by-state level. That's a positive in terms of just the general activity. Consumer sentiment's continuing to remain under pressure. Unemployment rate is going back up. We're starting to see that congestion index get weaker again, retail, recreation get weaker again. As again, this is leading to just less oil demand, less oil consumption, less product demand, which is just going to push more into the open market, which is going to, again, maintain their exports from staying very elevated in general. Now, when we look at Fujairah, Fujairah reported 20.77 million barrels as they rose for the second consecutive week, rose a total of 1.483 million, which is an increase of 7.7%. And it was really driven by heavy resid. So large build and heavy resid offset draws in light and middle stock. Light disty saw a draw of 1.317, which is a decline of 17.5% week on week, which is the lowest level that they've been at since November. The east of Suez gasoline market was, there was some optimism in terms of what's happening in the U.S. That's starting to pare back a bit. And Indonesia's state-owned was heard to have raised run rates at its 348,000 barrel a day Silicap refinery as it looked to increase that gasoline production. So pressure in terms of demand from India, China, more exports, and then some positive. So again, we're going to get an increase, but not a huge surge. It's just going to kind of be that steady state, which is just a net positive for kind of where we are, especially on a pricing side. Middle distillate fell 175,000 barrels to 3.348, down 5%. And the gas oil market had some support as there was a hope from some of that overseas travel, overseas movements. The travel front on the international side was, New Zealand, Australia is a nice positive move. The UK is increasing flights. That's something that was helping promote some of this movement, some of the pricing increases. That's something that, again, we think is going to be fairly capped in general in terms of some of those drawdowns. And then when we look at heavy resid, it rose by 2.975 million, 36.1% week on week. And it's the greatest week on week rise since stock reporting began at the start of 2017. And it's just a mixture of, guys not wanting to get in front of oil prices, waiting to see how things balanced out, and just that some of those headwinds that we continue to see on the global shipping side continues to play out in the heavy residual side and heavy disty side. And that's where we think that we're going to get a little bit of a build going forward in light disty, middle disty, some draws in heavy. But we're still going to kind of be able to maintain some of these levels in general. The question is going to be, where does this Asian product go as we continue to see a shift in the overall supply chain, which again is going to be the problem in some of these locations. And then speaking of which, okay, well, where's oil going? So here you can see Russia had their increase to about 3.5 million barrels on the export side. Nigeria, Norway had that drop. Norway's now increasing in May, and then there's another increase that's coming in June as there's some work that's ending in terms of just working on pipelines, general maintenance. The Congo saw some increases. The problem is the Congo is still struggling to sell some of their cargoes. And then we'll go through OSPs in a second. But here you can see we're starting to see some elevation in April. But then when we turn to May, that's when a lot of these guys are increasing production. So we will see some of those cargoes start to increase and come to the water, as we see in Nigeria, Norway in general. And then we'll start to see that increase in Russia and Libya as well. So when we start to look at, some of the interesting things with the OSP, so Saudi OSPs, they had a big drop in prices in this Sidi carrier, considering, given that it goes against ICE Brent. So Sidi goes against ICE Brent, and it's down $1.70 versus 20 cents in the Northwest Europe and the Mediterranean, which is also against ICE Brent. So when you look at what they're doing, they're competing more in Europe, increasing prices in Asia, and it's very interesting to see how they're trying to compete, because again, it's just a matter of, is there too much supply, is there too little demand, and in this case, we're going to say both, and that's going to cap some of that capacity coming out of Europe in general. Now, the other concerning thing is Urals weakened on Tuesday with the prompt month closing at its lowest level in a year. So what does that mean? So Gunvor sold 100,000 tons of Urals for April 17-21 delivery at $2.65 below dated Brent. And then we also had another sale to Shell for the end of April delivery at down 270, and this compares with a drop of a discount of 210. So again, we're seeing this additional pressure. So we were trading at 235, 240 below dated Brent. Then we strengthened a bit to be below by 210. Now we're weighed back to being at a discount to 270. Again, this is where we continue to see that pressure. Weakness in Urals comes after 4 cargoes were added to the April loading program, bringing the total exports from the Baltics to 4.3 million tons, which is the most in 3 months. So not only are we seeing pressure on pricing, we're also seeing more supply. And no Urals were sent to Asia in March, so this could easily also be Russia trying to put more Urals into the market, trying to get some of that demand out of India, as they're trying to avoid buying from Saudi Arabia. They've increased their purchases from West Africa, again moving some of these things back and forth. Now, Libya said its OSP for Es Sadir for April at a discount of $2.35 to dated Brent. According to a price list seen by Bloomberg, the price is the lowest since May of 2020, which compared with a discount of $2 for March. So if you think about what March and April was in 2020, these are huge discounts. So when you're thinking about Saudi Arabia cutting prices into Europe, Libya discounts, Urals discounts, clearly there's again that problem with what is happening in the physical market. So Libya Shahara OSP at $1.40, negative $1.40 for April, also an 11-month low compared with 95 cents for March. Angola has yet to sell 12 to 13 cargoes for crude for May loading. And then that's about 40% of the 33 planned export cargoes for the month. And if you just look at April, April's fairly low. And when you look at May's lower than April, but yet they're still unable to move some of these cargoes. It's on a fairly normal pace, but it's at a discounted price. And again, so they're increasing movements, but at a lower price, and that's going to take market share from someone. So there's about 33 planned for May, a relatively normal pace. June's preliminary loading schedule is due to be released in the next few weeks. Nations crude for April loading is now sold out. So when we look at April's now sold. There are some re-offers on there, but the Congo, 3 cargoes of crude are yet to sell out of 7, which is very late for them. And that's, again, concerning for where that demand is in general, because typically you have a lot of that going into China. And then Sonangol cut offering prices to $1.50 below dated Brent, which is down from $1 in the end of March. And that's for May. Again, those discounts. So now they're discounting 50 cents away in order to move these products, which just, again, doesn't speak to a lot of strength in the physical crude market. And here's why. When we look at global crude on oil on water, we continue to see that moving above that 5-year average. as there's a lot of crude that remains on the water. As we said in segment 1, there's a lot of crude that is building again back on land storage, which is going to be that concern as to where is some of this crude moving to. Now, oil in transit also increased. We're still below the 5-year average. Again, a lot of that is being driven based on some of the residual from the Suez, some of the stuff moving in just around the world. And then we also have a fairly large decline in refinery throughput. That will start to adjust. That'll increase oil in transit, just because oil being purchased now is going to be delivered in the middle to end of May. So you're going to start to see some of those purchases, which again will push some of the oil in transit higher in general, just as they start to pick up as we go into the end of April, beginning of May. Now, crude oil and floating storage, you can see that we're now pushing right back to the 2021 high. We're still seasonally adjusted all-time highs. So the amount of crude oil held around the world on tankers that have been stationary for at least 7 days rose to 113.35 million barrels as of April 2nd. That's up 7.8% from March 26th. So again, you're seeing this steady increase as that demand is just not there. With downtime is going to remain through April. That's going to keep stuff again on the coast as they try to manage some of that storage system. Now, on the European side, we had some nice draws in general, as we had some drops. 135 tons came out of gasoline. Gas oil, another decline. So we have some of that residual coming down. Again, they're trying to hold on the gas oil side. They're trying to hold along this 15-year average, just to, again, trying to manage. So some of the product that was supposed to come from India and from Asia into Europe has now been redirected. Again, trying to manage, because you don't want this to get too elevated. And so far, they've done a very good job of managing that system. Then when we look on the gasoline inventory side, you can see that gasoline had that big drop as we have more cargoes that have pushed offshore, coming out of tanks, coming into the floating market. And a lot of this is going to be coming into the U.S. So again, this will remain elevated just because the limitations on movements, and we will have more of this coming into our markets. Then when we look at Singapore, Singapore had a small draw. We're still at 50.7 million barrels. You can see that's elevated for this time of year. We're still gonna, as we've been saying, just go sideways from here, just because we do have more pull into the American markets, but we have more coming from the Asian markets, which again, Singapore is kind of meeting in the middle, and that's going to keep some of this storage fairly elevated at these levels. On the middle distillate side, you can see that we're starting to come down. We're still at the top end of the cloud, but we normally see some draws here. The problem is, the lockdowns that are coming into, or the slowdown that's coming into some of these markets, especially on the Asian side, is going to push some of these back up. So we don't think these draws are going to continue, but now start to go sideways and start to see some builds. Now, on the gasoline side, we did get some nice drawdowns. Again, some of this is coming into the U.S. markets, or North American markets in general, which has been a bit more beneficial. But we do have, again, those exports coming from the Asian markets will start to show up here. We don't think, when you look at that 15-year average, you can kind of see that we get a gradual decline. We think that we're not going to continue to come down, but we'll have a rate of change that will flatline a bit. It'll still be negative, declining, but it's going to be more in line with what this trend normally is as we start to average it out. Then when we look at the time spread, the time spreads here have kind of flatlined at about 32 cents. It's coming under pressure. We think that there's going to be more pressure to the downside, just given the amount of product that, or I should say, crude that remains in the market in general. But we are seeing some bounce in crack spreads. So the hydrocracking spread has gone positive again in Singapore. It's still not enough to cover storage and some of the other side, but again, we're starting to see some of this stabilization, and it's being held by obviously the decline in crude prices. So this is where, it's just a matter of, is there demand? Where is crude pricing? So it's just something that we think will start to normalize and flatline at these levels going forward. And here you can see just the hydrocracking margin, even though it's positive, it's still well off of the 5-year average, still at the bottom of this cloud. And we just think that it's going to continue to go sideways here and be under pressure. Then when we look at Urals, some of the benefits with Ural prices being priced at such a discount is, again, helping some of the refiners in general. So they're going to turn to and try to purchase Urals versus other. Libya is obviously going to try to compete against that. But as Urals in Libya get cheaper, that means that U.S. exports have to get cheaper to compete into this market, which, again, is why we think that there's going to remain pressure on the U.S. export side. And then the same can be said coming into the Mediterranean on the Urals front. But again, Libya is going to compete even more aggressively in this market, which is why we have to see some of these discounts. But as these discounts come through, that's a net positive for refiners. So refiners will be fairly active, but as Europe remains in a lockdown, that's going to limit the amount of local demand. So they're trying to manage storage. So they're going to have to increase exports. And again, you can kind of see how that's going to put more on the water in general. China's super tankers remain fairly elevated, obviously above the 5-year top of the cloud, but again, starting to kind of flatline at this point. Then when we look at run rates, so Shandong, we had a small decline, but still above 70%, which is elevated for this time of year. This should start to come down over the next 2 to 3 weeks. We should see a 6 in front of that number, closer to 68% in general, as we continue to see pressure coming into the state refiner side. And it's not pressure on a negative side. It's just there's more turnarounds. There's more work to be done, which again is going to limit the amount of oil demand, which is going to leave more oil in storage and more oil in the offshore market, which we're seeing here as we continue to see that slowdown. Japan, South Korea is still facing those increasing COVID cases. Southeast Asia, same thing. Limitations on movements, limitation on consumer activity, which just keeps local demand for products low, which means that you have to export more, which means that, if the export market is not as frothy not that it has been in a while, that's going to limit runs. Limiting runs means you're not going to use more crude, which is going to keep more crude in storage and floating storage, which we continue to see here. North Sea, we had some purchases, so they went from floating into now transit. We're still above the 5-year average, but it's something that we keep talking about is going to remain above the 5-year average, but in a much closer to it as we saw some of those purchases going into Asia. West Africa is the one that we've been talking about, seeing kind of that spike in storage. We're back to the 5-year average. Based on the discounts that have been rolled out, we think that we're going to stay in the 5-year average just because we do have an increase in loading schedules. We're still a little slow on sales, which again is just going to keep more crude sitting in the floating market, not back to the highs, but again, greater along those 5-year average. But on the other side, on the Middle East side, as we've been talking about, we continue to see more and more boats being held for storage, which again is going to be a matter of Iraq continues to increase. They're still well ahead of where they should be on any kind of OPEC agreement. And then as we go into May, the increase is already there. Guys are really chomping at the bit, especially the UAE, to get out there. And here I think we're going to start to see some of these cargoes and residuals get prepared. And then we should continue to see this trend higher in general as more crude is held in storage. Europe, it's going to be a mixture of coming onshore, offshore. Again, that mixture back and forth. We thought we'd get closer to the 5-year average. Now we're here. Now we think that we're going to track the 5-year, fairly closely and go a little sideways at this point as the competition remains. Shandong, we're still right at the top of the cloud, still at that elevated level, but starting to work through some of the onshore. But that's going to be replaced by the floating. So again, we're still going to stay well above that 5-year average and at the top of the cloud. As we talked about exports, we had a huge increase in exports that has normalized storage a bit. So now we're going to have to see, okay, well, how quickly do they refill? We're still above the 5-year average, but much closer to where we should be. So we're getting some normalcy in China, which is a net positive in terms of limiting some of those exports or those surging exports that we saw in March. They'll still be elevated in April, but not to the same level, just because we do have downtime, we do have turnarounds. That's going to keep more internally consumed instead of externally, which will be some of those positives that we talked about in Singapore and Fujairah. So we went through a lot. If you have any questions, please, comments are always welcome. We like the back and forth. Thanks again for watching. If you have any questions, and please like, share, follow, share it with anybody who you think would enjoy, the work that we do on obviously the energy and macro geopolitical side. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.